Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, July the 6th. Oh boy, today we have a bloodbath. And if you are asking why, well, I have some answers for you. Some are obvious, some are not so obvious, but let's go into the economic data first and then into the charts, because I think today is quite a big day in terms not only on move but also on fundamental analysis that may turn into a change into some technicals. So stay tuned. But first, let's review the 30-year mortgage rate, 6.85, continuing higher, 0.10%. And this impacts obviously the applications, minus 4.4%. This is just a battle of interest rates versus the people that want a mortgage, and basically refinance going lower, market index going lower, and the overall purchase index going lower. But first, before moving into the big data, let's see how we started the day, 8:50 and 8:15, and how we end up at 10:30. Because we started with the ADP employment change basically destroying the expectations. 497,000 versus more than double employment change. This is huge. Coming back to July 2022. And more importantly, all these changes in the private sector are going towards services. And services is what Fed is watching. Services, services, and services. Are we still seeing sticky inflation? That's the key to really understand today's price action. At 8:30, initial jobless claims, it didn't impact a lot the market, but still shows signs of more or less tight labor market, a little bit higher jobless claims, but lower than expected and lower than before continuing jobless claims. And then services PMI final 54.4, crashing expectations. I'm going to focus on the services. ISM services PMI 53.9, more than 3 points more than the previous one, and crashing expectations. Services employment, we were expecting 49.9, not 50 plus, that means expansion, and we got 53. So a lot of inflation, a lot of strength on the services. And finally, services prices 54, services business 59, new orders 55. All these shows strong services. And this is not what Fed wants. And this is not what markets want in order to get rid of that sticky inflation. And then finally, but not least, JOLTS job openings 9.8 came a little bit lower than expected, at least, and job quits higher. So job openings didn't provide a lot of insight regarding labor market, but services, the strength of the services, the strength of deployment, the strength of the prices on the services, all these points towards more hikes, with 95% of probabilities now coming from the 89% 1 week ago, and 1 day ago 95 point more, 25 basis points. And not only that, look at this, we are pricing in also on March no hike. So this is a matter of markets expecting one more hike instead of the two that Fed are saying. And more than that, when is this hike going to start cutting? So markets are betting no 2 hikes, 1 hike still, despite the fact that today's data is really bad. But higher for longer. Look at this. Analysts think that until May 2024, Fed is not going to start cutting rates. And this is huge. This is huge to understand. Because then Fed Fed Logan said today that a little bit of information also towards this kind of information. So let's check it out real quick, because as you can see, Fed statements, let me just quick swap. So Fed statements, they are saying, Fed slogan, more restrictive policy is needed for the FOMC to reach goals. More restrictions, more Fed rate hikes are likely. More is not only one, it's the two that they were saying during the FOMC. I am very concerned as to whether inflation will cool quickly enough. Again, services is their focus, and I see no sign of an abrupt worsening in labor market condition. Labor market remains strong, and that market likes the strength in the labor market because it shows that we may avoid recession. But at the same time, this strength in the labor market and other parts of the economy like services impacts inflation, and Fed basically will continue hiking rates. So today, all today's price action ends up being a reality check for the markets, in my opinion. This is the 1 hour chart on the NQ. We got this higher low, this new high that we got. So this wedge that we broke out here, as you can see on Friday, this is an important level of inflection. We pushed, we held, we look below, failed, we look above, failed, and now we are moving towards the downside. If you have experience in the markets, you know that this is a Wyckoff distribution. Look below, fail, look above, fail, taking liquidity in order to move lower into big news. And this is what happens. These levels that I was watching, this was the support from Friday at 15,300. We basically took that during the overnight and we were waiting into the open. And before the open, data started accumulating. And I took this beautiful short with the stop above this previous support that is now resistance. I took the short, I think around, let me check, on here. And I was trying to add down here, but I just didn't want to risk it. And I just continued with one truck contract and I took almost, I think it was, let me check. Well, no, actually, let me check in the broker. 200 points. 180 points. That's more than $3,000 into these shorts with one contract. But getting that aside, look at this level. The inflection point that I was watching today for the target, and also this ascending support that we are getting, we are now trying to reclaim pre-market low, because during the overnight we were super low. And this was quite a tricky day because I think a lot of people were trying to buy the open as we did several days ago. For example, yesterday we gapped down into the open and we raised higher and we basically ended up flat. And then today we gapped down into the economic data and it was a bloodbath. Minus 1.27 for the Nasdaq, because now we are trying to put a W inverse head and shoulders. Quite beautiful pattern. If you were trying to catch some long scalps down here, Russell 2000 also is trying to push higher, and dollar is pulling back, and Nvidia is trying to reclaim a little bit, but as you can see, red everywhere. So don't try to buy these kind of dips when we are seeing this kind of weakness that is justified on fundamentals. This is a nice, don't get me wrong, this is a nice W in better head and shoulders towards 1500, 170, and that's actually quite an inflection point. The setup is here, but I don't think Nasdaq today is able to really put a big reversal, because there were shorts into the open, into here, and also into here. Right here, they are still on profit, and I don't think they are going to just bail out at these levels. They will add again because they have all this structure of, they have the advantage of the sentiment and momentum today. So be really careful if you are trying to catch some longs, because banks are all in the red. Every bank is in the red. Sector funds are all in the red. The only stock in the Nasdaq, the only big market cap stock is Microsoft, 0.4%, because it got a new price target of 400, because analysts think that Microsoft is the next one to reach $3 trillion after Apple. And Apple is trying to fill the gap that it left behind, but it's being rejected. So gap up into gap down, maybe this is an island reversal, and we are seeing that kind of setup in a little bit of stocks. So be careful with these gaps into gap down, gap up into gap down, because they are really dangerous and really important technical setups if we change direction, if we change trend quite aggressively. So this is a real setup, but I don't think today is a day to really take it. But to each their own. I just provide what I see, and I took a really decent, a really nice, and really interesting setup short based on fundamentals and based on my levels. That's what I like to trade. I would like to trade long if we wouldn't have this kind of structure higher. I told you about this resistance, and I don't think this move is a high probability trade. And nothing else. I think there are certain markets that are trying to reverse a little bit, but overall, weakness, pain, blood, and red everywhere. Gold, copper, silver. Even crude oil it's not liking these high interest rates that will crash demand for oil. And also, look at this. This is the UK 100, the FTSE, the UK index. It's down, look at this, 2% on the day. And as you can see, it went from one level of support to the another level, straight down. And we might see continuation in the upcoming days. So be really careful, because this kind of move today based on fundamentals, we try to break out this and we pulled back. Don't get me wrong, this still can continue higher to do this after this bounce of the support, ascending support. But you have to really be aware about the kind of resistance that we are leaving behind above and the kind of support that may break down here. So the first levels that I would like to see respected are, today we need to hold this structure open on Fridays that we are now rejecting after basically going through it like a knife. And after that, it gets trickier and trickier, because the next level of resistance, of support, sorry, is below 15,000 psychological. Maybe these two candles on the 4-hour chart may provide around 15,000 some kind of support, but next is this huge, you remember this reversal, red into green? I don't know, but today is quite important. Today's price action is not just subtle pullback. We started pulling back this week at the beginning of the week, in the middle of the long weekend, but right now, what we are seeing is some strong sellers coming into the market. And you have to really be aware of that. really pay attention to that. Because the rest of the week, tomorrow, Friday, we have non-farm payrolls and unemployment rate. And we are expecting way lower non-farm payrolls and a tick lower on unemployment rate to show that labor market is strong, but payrolls are pulling back because wage inflation, that spiral that was pushing inflation up, coming from the consumer and from the wages, needs to calm down a bit. And earnings also quite important. Average hourly earnings for year over year and month over month, we are expecting continuation to the downside for those that will show signs of lower pressure on wages and consumers and on earnings and money, basically. As we got today, if the expectations are not met, tomorrow we might see a big continuation to the downside into the weekend. So be really careful tomorrow, Friday, because what we saw today, what the kind of moves and the kind of participants, I saw big blocks, hundreds of blocks on the futures and quite a lot of momentum and selling pressure. So be really careful and let's see how we end up today. Remember, this level 15,170 is critical for that. And the S&P has also value area high at 4435. It's trying to build a trend, but anything can happen today. Shorts and bears that were pushing into the open will not let the Nasdaq cross certain levels. Be aware of that and manage your risk. And that's all from my side. If you found this video useful, please remember to support the channel, click the like button and subscribe, because I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. I hope you had a good trading day today. There's still a couple of hours into the afternoon, but we have a really bad sentiment today. If you're looking for longs, be really careful. And remember that discipline and risk management are key for success. Nasdaq is pushing 170, as I was saying. Let's see what happens. This pullback is quite decent structure. Let's see if this gets broken and we can see continuation into basically 193, these levels. And these levels, let me tell you, there are a lot of shorts up there. Stay safe, everyone, and see you tomorrow.